Good evening, everyone. It's 11:10 p.m. here in New York City, August 14th. Wanted to share some analysis on the live trade that we've got going on BTC. Now, live trade is a little bit of an anomaly in this situation because I don't actually have a trade on, but we've been hawking and tracking to try to put a trade on because we're approaching a zone where I did a bunch of analysis about it actually in my last two videos. I did both the bull and bear count this week, as you guys are aware, and I like buying long right around that hot box that I had. Now, the very straight line down that we've been on with very light retraces has made entering a trade short on the way down there difficult to find a high conviction spot. But I think we found one, and so I wanted to share my research on it in anticipation of potentially putting in a short for Bitcoin to ride the 5 or the last zigzag Z of a triple zigzag combo downwards. So here is the chart that you guys saw. I believe it was in my bull video that I had this chart, with the exception of I didn't have this red pitchfork. I just had, yeah, it was my first in the bull video where I identified this hot box as an area with a lot of technical confluence using all types of analysis. We had, of course, Elliott, but also algo targets, all types of geometry tools, Fibonacci measurements for the various wave shapes and counts and such. It was just replete with different forms of TA that all pointed to this region being quite interesting. So I've taken a lot of that off to unclutter the chart, and I'm about to take off this red pitchfork. I just had it on here to illustrate that we've tapped this median line and prices responded very well to this pitchfork. Nevertheless, because of the separation of the Vegas waves from price, I don't think this is where it's going to end. I mean, I guess in theory you could be hugging this whole thing downward until the Vegas waves close in and finally you're ready to break out of them, as was the case here, here, and here. But one of the things I wanted to illustrate is that in every preceding move since the 20K high, and I don't have that piece of chart here, but let me just start with that maybe. Once price crossed the Vegas waves aggressively, like it did here, and then recrossed them to the upside, then the real downward move began, and throughout the move the Vegas waves have been touched multiple times. You can see here after it crosses, the price crosses the Vegas waves to initiate this downward trend, tries to break through, there's a little wick, and then down again. So that counts as one, touch here, 2, 3, 4, and then it took a while to consolidate before it broke out, right? So 4 touches. Note that the areas of deepest price traveled are also the areas where there's the most separation from the Vegas waves. This is an important concept when you're looking at momentum, that if you care about moving indicators, and I think for us trade devils at least we care about the Vegas waves, which are moving moving averages, then especially at the higher time frames, like I've got it on the 2-hour, you really want to pay attention to how much separation there is between the Vegas waves, and that's going to help you inform your count. If you have a count that's ending and changing trend, say here, and you've got this much separation, well, highly unlikely. Maybe you'll get closer, you'll even work through it or touch it or approach it, but probably the trend is not broken yet. Okay. Same here, breaks through, breaks downward once, wicks through, more than a wick, I mean a substantial double top here, then breaks again, and then touches it once, twice, thrice, almost misses it here, almost touches it but misses it, and then 4 times, right? 4 times here, 4 times here, and it's not the 4 that's important, rather as the trend develops, you're going to get periods of deep separation, and then there's a retracement that gets it closer to the Vegas waves, and deep separation again, retracement, deep separation, retracement. You want to see convergence towards the Vegas waves before calling the trend to end, right? And you can see some conversions here. This one, there was a lot of separation because of this huge move down, but then convergence throughout this whole thing, and then finally across, right? Same thing here. Same thing here. Price crosses the Vegas waves, 1 touch, 2 touches, 3 touches, 4 touches, 5 touches, and then separation, and then, you know, convergence, and then finally break through. You know, some more consolidation, and finally breaks through for good, right? Well, what we got now is nothing but nothing like that. We've got a cross of the Vegas waves, and then just separation. This does not look like a move that's about to end to me. I owe you guys a momentum video, and this is one of the topics I'm going to cover, is how to use Vegas waves and other types of EMAs to help hone in on an Elliott count. Well, this is one of the ways I do it is, does this look to you like the end of an impulse? I mean, it could be, right? It could be one of those cases where it's like this, and then you end up going sideways for a while, allowing the Vegas waves to catch up. But after the Vegas waves were crossed, you really haven't even approached the Vegas waves. Maybe here, but even then there's quite a bit of separation. You haven't approached the Vegas waves at all. So that to me is a clear tell that the trend is strong and going to likely go down for minimum another $1,000, if not 2 or 3. I don't think 3, but you know, a lot lower than where we are now. For this red pitchfork then, using the same theory, if we're not about to end this trend, how likely is it that this median line is going to hold for too much longer? I think unlikely. I would defer to the gold pitchfork, which is the one I had in the videos. And not only is it more confluent with this yellow zone a little bit sooner, and if you channel the move, not in an Elliott way, but just in terms of a channel that contains the price on both sides, something like this, well, the channel is more confluent with this yellow pitchfork as well than the orange one. Doesn't mean that the channel can't be adjusted if there's some sideways here, and then it looks more like this or something like that, but doesn't mean this can't happen. But for now, I think you have to focus on this gold pitchfork as primary. So let me get rid of this red pitchfork. Now I'm not going to do the count. I already did that in the other 2 videos. I had this as a 1, 2, 3 in progress, probably 4 in progress still, and then a 5 down in an impulsive move. Or in a corrective move, I had it as a triple zigzag. A, B, C, running triangle, X, A, flat B, C, and then another X being put in, and then another A, B, C. And you guys recall from my videos that when I measured both, it didn't matter which count you liked, whether it was a corrective move down or an impulsive move down. The hotbox ending zone was the most probable zone for the various measurements, where the W, the Y, and the Z were approximately the same, about 100%, or where the 4 ended around here, and then the 5 projected between 50 to 618 of the 0 to the 3. Both ended approximately in the same place, which is, again, one of these win-win setups that I like, where whether it's corrective or impulsive, you're going to the same place. And so if you have a good short entry, you should strongly consider it. So I'm not going to pull all the geometry tools and whatnot again. This is just a quicker update. But I wanted to give you my view on a likely count for this little structure here that's been sideways for a few days. Because I'm eyeing an entry upon confirmation that this is either a triangle or a flat correction, an expanded flat correction. So let's zoom in here on the, let's do the 10-minute. Oh, actually, let me undo that. The other point I wanted to make while zoomed out at the 2-hour is that look at the VPVR histogram. We've breached through so many levels of support. Here, the POC, here, here, here. I mean, we're kind of in no man's land. from a volume perspective. There hasn't been a lot of volume transacted around these levels, and we're in dangerous territory. You know, if we go back down and put a new low in relative to this impulse, we're very likely going to put a new low in that's substantially longer than, or lower than this low. Again, gaining conviction around this hot box. There's just not a lot of volume history from this corrective sequence from the 20K high downwards to act as support for this move down. Already it broke through all of this in what's probably the most impulsive move of the entire correction since putting in the first low. Look at the slope of this relative to this and this. It's vicious. So just another data point as you're thinking about which counts, you know, do I have a 1, 2, 3, 4, 5, and then this is up? Ain't looking up, guys. Or is it, you know, A, B, C completed, or like some kind of WXY completed? To me, is it possible? Yes. Is it credible? No. You want to use a lot of different tools to get comfortable with your count, not just Elliott. Just because something measures well and counts well doesn't mean that it is it. No, you have to compare it to all the other data points. And all the other data points to me point to more down. VPVR, the channel staying intact and not even coming close to being breached, the pitchfork, the Vegas waves, and the separation from the Vegas waves. The fact that, you know, we've been impulsing downwards or correcting downwards in a very impulsive looking fashion for almost $3,000, and we're still channeling in this very tight, narrow channel. All of those things point to more down for me. One other thing is volume is still spiking here. There's no moderation of the volume. Typically, you want to see something like, you know, volume drying up and then one final spike to put in the last pivot, like here or something for here, or here for here, before you move upwards. But that's not what we're seeing here. Volume's still intense for all of this move from here, before this big drop, all the way down to here, and the volume is consistently high relative to, you know, what the beginning, the first half of this impulsive move. Anyway, just giving you a little bit of my thought process around other data points to consider as you work on your count. So with all that said as context, let's zoom in to the 10-minute again. And get rid of this channel. All right, so because you've seen my count already, both the corrective count as well as the impulse count, I'm not going to redo that here, but I'm going to focus on this piece of chart right here. Okay, because I think it's quite important for this one. There's not a lot of things this can be, guys. You could have the 3 of an impulse or the Y of a triple zigzag ending here at this point, and then this would be either the X or a 4, and we're going down. But look at how small this 4 would be, and not only in retracement, but also in time spent. Even relative to a very brief 2. Let me go back to the 30-minute this time. Even relative to this 2. It's not substantial enough to me to play as the 4 of the same count, of the same degree. I mean, okay, 68 bars. This is only 98 bars, and look at how much price needs to be corrected by this tiny little thing. I don't care so much that the retracement isn't deep. It's just relative to how much price needs to be corrected, it hasn't spent enough time, right? This 2 corrected just this 1. This 4 is correcting all of this possible 3. Or if it's a triple zigzag scenario, this vicious move down here. I mean, it was just vicious, right? So not credible. I want to see it last longer, something like this, right? This would be, forget about the bars and whatnot, just from a right look perspective, doesn't this look more like a 4 to you on this move than relative to this 2? It surely does to me, right? So from a right look perspective, I don't have this count where this is a 4N for all of this as being that credible. So So if that's not credible, then what is? Well, I see three options that are technically valid and could potentially be it. And I want to cover all three. But we're going to find out soon enough which one of those three it is. So option one is the simplest to me, which is an expanded flat correction. That's kind of my primary right now, where I've got it as A, B, C. Let me put it in an appropriate degree, given how zoomed in we are here. Let me get it back to the 10-minute actually and zoom in more. Now that you've seen my point about the 4 being not substantial enough if it's just this. And when I say 4, let me use it interchangeably as the second X, also a triple zigzag. I want to be fair to both counts here, especially because they measure so closely as far as an endpoint is concerned. We don't really care which one it is. But analyzing the structure, not in the context of whether it's a 4 or an X, but rather as an entry point, I think is what's interesting. So this is one option where this is an A, B, C. And one of the things I like about this is the point I made in my bear video, which is that whatever doesn't get put in price often gets made up for in time and vice versa. And when I was saying that, I was talking specifically about fractal patterns like triple zigzag, where you got 3 zigzags strung together, and that generally applies to the zigzags and even the X's, which tend to be fractal in nature. But I found that relationship to also be true within a corrective pattern like an expanded flat. So where you've got the A, which is short relative to the B, and I like how sharp the B is relative to the A, because the A is shorter and therefore it makes up for it in time, right? And the B is so sharp and therefore it's much slower, or it's much faster in being put in. And now we're going up for the C, which is quite sharp. It's looking like it's sharp, right? Which it should be if it needs to catch up to the A, to the top of the A and the beginning of the B, and then even surpass it, right? So another reason why I like this as an option, ABC, is it measures quite well. So let's measure the length of the A, and at the end point of the A, what does the B measure at? Well, almost 1272, which is, I think the book Elliott Wave Principle states 130% is the idealized measurement, but to me that's just, they were being lazy and they rounded up 1272, which is a Fibonacci sequence number, or a derivative of a Fibonacci sequence number, whereas 130% isn't. But anyway, almost, I don't know, like $50 or something shy of the ideal measurement for the B relative to the A in height. So this would have the C being an impulse or some kind of diagonal, but just given the wave shape, I don't see a diag, some kind of impulse to put the C in. And the C would come in, well, there's a lot of different ways to project the C. Whoops, wrong tool. But if you're playing probabilities, the most likely is around either somewhere between 130 to 161.8% of the A. And what do you get here? A possible landing zone for the C. Now, what do you see on this chart? This is the kind of thing that I get really nerdy about, is this 50% trend line from the pitchfork, from the 100% pitchfork, so the first trend line before the upper boundary, crosses right at the 1272, which, if you want to slap a channel on without the wave having been put in, just for shits and giggles, you know, is this a probable path for this move? Well, I can't tell you, but it sure looks like it very well could be, right? And 1618 could be just a wick through it, but my point is somewhere around here, if price ends up somewhere around here, and we continue to see the separation of the Vegas waves, And we don't see any meaningful divergence in the indicators or oscillators that I use. Well, I'm going short. One other thing to check is whether there's meaningful algo activity here. So let me zoom out a bit. Let me get rid of this first measurement. That's too zoomed out. Well, one of the unfortunate things about these very deep and shallow retraced moves is there's not a lot of halfway back price patterns and pivots to measure algos off of. Now, obviously, there's a lot of different algos at play, so maybe some consider the 382 or even the 236 as opposed to the 50 or the 618. But as far as the algo that we care the most about, I mean, I guess this could possibly be one. So, but that's so high up there that isn't even relevant to down here. But let's just pull it for fun. From here to here, you do get a little wick over the 65%. So not textbook, but damn close. And you can see here, well, the minus 2618 is literally like $30 or $33 away from the landing spot here. That's kind of interesting, right? You can see here that the minus 236, minus 382, minus 618, these are all meaningful responses from price. So yeah, this could possibly be it. But I mean, by now, all the algos who shorted this move are very happy, and they've taken multiple levels of profit, and they're probably out, right? So is there another one since then? Well, this is so sharp, I can tell you, not for the algo we're looking for. Maybe this one? Yeah, this one. Well, actually, let me put the 50% on. This one comes somewhat close to the 50%. Let's see. Well, you got a response at the minus 236, very small. Another one at the 382, small. A more pronounced one at the 618. And then at the minus 100%, you get the big bounce. It's interesting. I'm going to keep this one on here because the minus 1618 for a move that's this vicious, I bet you there's some algos that are trading that particular algorithm that have saved a few shekels to cover their short around this level. So, this is interesting. Let me move this out a little bit here just to make room. What about this move? From this swing high to this swing low. Oh, we got one. 50%. It's the cleanest one so far. And that points to this 57.29.92. Then it also has the minus 618 right at the frickin' hot box, which I like. I like to see that. This minus 2618 from this algo, I mean, I don't know if they're still hanging out this far, but if they are, that's also somewhat confluent with this hot box. But I like this being confluent with this. So this could be you get a little 1 on the minus 236, then a 2 up 50% or so, and then 3, 4, and 5, and then you land on the minus 618 here or something like that. That could happen. And then if this move ends around here, well, I mean that would invalidate this expanded flap. But is there a possible? Where are we at right now? Oh, we're right on the 618, like to the tick. You can't see it because it's covered by this white. Let me just pull this measurement to the right. Look at that, right on the 618 right now. Struggling with it. And if it stops there, then we've got lots of algo targets here that have some clusters of algo targets. So I'm going to take this off because this move's not done. But this is interesting that it stopped right at the 618. I didn't notice that. Okay, so the expanded flat option we talked about. What other options are there? Well, every time there's an expanded flat option, there's also a running triangle option. Because if the expanded flat fails, meaning the C doesn't get put in here, and it doesn't reach the price extreme of the A, well, you could have an A, B, C, D, E, a running triangle, right? So that's an option. And we'd be working on the C. So where this move stops is going to tell us a lot about whether we want to take this short or not. One of the thoughts that I had as I look at this is to start laddering in at the projection of the C, ending in a triangle, and then end the ladder at around maybe 1618 or so, you know, somewhere in this region, with a stop beyond the 1618. Could be a way to play it, because then you capture both the triangle a little bit and then also the expanded flat. And if the triangle is a triangle and you get the D down, then you can play the E. E comes up and you short the hell out of that thing with a stop loss at the C, and boom, down she goes, or you get stopped out for a tiny little paper cut. Could be a interesting trade. There is one possible other option here, which is that the running triangle began a pivot to the left. So this is the A. This is the complex B, given how long it took and just how ugly this move here is. And we're working on the C of that. The reason why I don't love that is, first of all, this measures better to me as an expanded flat, or a regular flat, A, B, C, A, B, C, and then an impulse up, than it does as a zigzag. And every leg of the triangle, or I should say no leg of the triangle, can be a flat pattern. It has to be one of two things: a zigzag family pattern or a triangle. And you can't have a triangle in the A position of a triangle, and so you can have it on the B, C, D, or E, but not the A. So this has to be a zigzag family pattern, and it looks very much like a flat to me. So I don't love that. I wanted to acknowledge it because it's there, and because it's there, you could also have an expanded flat where it's not measured as well as this one, and it's A, B with a big zigzag, and then a C here. But again, you know, we're looking for the right look, closer to ideal measurements, and so I'm going with this is either a triangle in progress or an expanded flat. And very possibly an expanded flat, given how well this B measures relative to the A, the sharpness of it relative to the, you know, the lower slope of the A. And then this kind of C here, whether it's the C of a triangle or C of a flat, looking kind of like it's starting an impulse here, or has already started an impulse, and it's on the 3 of an impulse more than it is a zigzag. I mean, if it's a zigzag, it would have to be A, B, and a pretty long C leg. So let's actually, you know, let's try to, can we even measure it because it's a running triangle? Probably not. Yeah, the thing about running triangles is you can't measure the C in the ratio of the A because you don't know where the BD trend line is. And to measure a running triangle, you want to measure it, let's say this is the BD trend line, you want to measure the height of it from the end point of the A to the vertical line downwards to the BD trend line, and then you anchor it off the C, which, you know, if you, let's say it ends here, and then you want to project the D at around 618 or whatever the ratio that's dominating this triangle is. But we don't have a trend line because we don't have a D, and we also don't have the full height of the A to project the C. So we can't project the D and we can't project the C, so we're left guessing as to where it might end. And so right now, let's watch this very carefully. If this is looking like it's going to go up to around $6,600, $6,700, $6,800, I think it's a good opportunity to short it with a fairly good risk reward. So I'll be running that live trade if this in fact happens. But for now, just this update, and I'm going to get working on that momentum video.